Over the past few months, the defense sector in India has seen a V-shaped recovery. In fact, the Nifty India index is up by 36% in 2025 alone, while Nifty has moved up by only 4 to 5%. I hope you already know the reasons why. We had discussed about it in our aftermarket podcast a few months ago. So there we had talked about few stocks, which were they? HAL, it moved up by 60%. Then we talked about BEL, it moved up by 50%. And now, since the sector is rallying again, the hype is real. Retail investors are once again thinking if it is a good index to invest in, especially with all the patriotism that is going around the country right now. So, in this video, I'll quickly set the agenda first. First, let's understand what is happening in this sector right now, which is causing it to boom. I know it will be a very short sector because most of you already will be knowing it. Then we'll be getting into analyzing the sector. This is a major important part because we need to understand how this sector works, how it gets its money, what are government companies doing, what are private companies doing. Then we'll also need to get into major stocks in the sector that you need to have your eyes out for. And after all of this, we'll be quickly discussing the SWOT analysis of the sector, the strength, weakness, opportunities, threats, and we'll be getting into the conclusion, which is the future of the sector and my opinions on how it could shape up in the next few years. So if you got the agenda, make sure you hit the like button before we proceed. And if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So the first segment from this video is why is this sector rallying right now? Now, two very, very critical points here. One, all the recent geopolitical tensions that are happening. Along India, we have seen Operation Sindoor and whatever happened before it, very, very strong stand being taken by the Indian government, and having proved the might of the Indian armed forces, there is a lot of interest in the sector right now, both from Indian companies or Indian investors as well as global companies which are looking for India's exports. So all the geopolitical tensions have actually worked in favor of the sector. I know a lot of bad things have happened, but I think overall it's a positive for the country and for the economy. We have showed our might to the world, and this is especially good for the Indian defense sector. I mean, think about it. If you're a senior government leader in any of the world's countries, you'd be seeing how India reacted to the situation and you would be having some interest there, right? And that interest alone is enough for a lot of good things to happen to the sector. And that brings us to the reason two, recent government spending. On the budget day, which is February 1st, 2025, Nirmala Sitharaman had come out with a budget which said that 6.81 lakh crore is going to be allocated to the defense sector in India. Okay, and this was already a 9% increase over last year's, somewhere around 6.2 lakh crore. And in the last financial year, the Ministry of Defense signed total contracts worth 2.1 lakh crore. And in this, 90% was awarded to Indian defense firms. So you see the trend. Already the government is pushing for a lot of Make in India as well as our self-reliance in the defense industry. Okay, along with all of this, the recent attacks have prompted the government to think more seriously about the sector, I am sure. There are even news saying that an additional 50,000 crores is going to be awarded or allocated to this sector through a supplemental budget. So I hope this trend is very clear. Whenever an event happens, especially a bad event, there is very likely to be a big response from the government or even in our personal lives, right? Whenever an event happens, that's when we open our eyes and decide, okay, we should do something about it. And that's what is going to happen. I'm pretty sure even in the upcoming years, the defense budget and the Indian defense companies are going to get a lot of contracts because we need to be self-reliant. We saw how the global countries acted towards us, and definitely the government would also want to be self-reliant. I'm sure that is what is making this industry very, very lucrative for all of the investors right now. So if this case is clear, which is why is the sector rallying right now, let's quickly get into an analysis of the sector. Let's break it down very, very deeply. Primarily, how does the defense sector get its money? It's through Government of India's defense budget. Okay, and where is it presented? It is presented in the annual budget in the parliament. Okay, so last year we said that 6.81 lakh crore was the defense budget. Does that mean the entire money will go into R&D? Will it go into equipment procuring? No, it will not. Out of this, 3.11 lakh crore, which is 45%, will go into defense expenditure. What is it? Paying salaries, paying for the maintenance, paying for all the things that all the Army, Navy and Air Force need to function on a day-to-day basis. Okay, and after that comes the defense pensions, which is coming out to 23% or 1.6 lakh crore. Ministry of Defense, the civil side of the ministry, gets 28,000 crores or 6% of the budget to make sure it functions properly. And after all of this, the remaining is 1.8 lakh crore or 26%. And that is where the money goes into procurement of new weapons, modernizing our technology, modernizing our armed forces. And this is a number that you should be looking out for. Whenever you hear the budget number, it might be the highest ever budget which is announced for defense, but you should be always looking into this capital expenditure number. Now I'll tell you one good thing here. It was a slightly higher, nearly 4 to 5% higher than the budget estimate. So the capital expenditure was slightly higher than what was expected. That is a good thing. Even in this capital expenditure, there's a further breakdown available. I'll quickly take my laptop here. Capital outlay breakdown. 1.48 lakh crore is going to be spent on capital acquisition, that is to acquire new weapons, and R&D is going to get 31,000 crores. And even in that capital acquisition, which is called as a modernization budget, 48,600 crores is going to be spent on aircraft and aero engines. Make sure you have this in mind, because you will need this when you're going to analyze the sector on your own. You need to understand which are the sectors or which are the mini pockets where the most money is going to be flowing in from the government, and that is very likely to have the best weapons ready. The best weapons will mean that they'll be the most export ready also. Okay, so make sure you have this in mind. 48,600 crore goes to aircraft and aero engines, that is new jets, helicopters and engines. Other equipment gets 63,000 crores, that is tanks, artilleries, missiles, radars, etc. Naval fleet gets 24,390 crores. That is new ships, submarines, naval systems, everything. And as we said, the R&D cost is also coming out to 31,000 crores. That will go to DRDO, infrastructure, advanced defense technologies, etc. So now you understood what is the capital expenditure of the government. Where is money being spent in the Indian defense sector? But one thing to note here, this does not mean the entire money comes into the Indian defense stocks. Okay, there will be a lot of foreign purchases. Let's say even guns, even other equipments will be purchasing from many other countries, including the Rafale jet that we purchased from France. Okay, so no way does it mean that the entire capital outlay that we discuss right now will directly come into Indian companies. But what directly comes into Indian companies, that is the second part, which is the 23,000 crores worth of exports that the companies made last year. Okay, this is purely Indian companies exporting to other global nations. The major procurement destinations were the US as well as Armenia, which is a smaller country. And the most exported component here was missiles, especially the BrahMos missile. Now this is where we arrive into another bottleneck. Not every company which exports are listed in the Indian market. For example, the BrahMos missile is manufactured by a joint venture between India as well as Russia. Okay, there are suppliers to all of this, but the major missile components are being made by a joint venture company, and this is not listed. But when we are looking into artillery systems, especially the Pinaka multi-barrel artillery system, you can see that a lot, again, it is developed by DRDO, which is a government agency. A lot of R&D happens there, and some companies help in manufacturing of it. One example that I'll give you here is Solar Industries. The stock is already up 70% this year. Even for the BrahMos missile, there are component manufacturers such as Premier Explosive, which has moved up by 584% in the last 2.5 years. So you see a pattern. In fact, I'll attach a table down below which says which company builds what for the Indian defense sector. For example, BEL, Bharat Electronics Limited, a government company. It manufactures radar, weapon systems, sonars, communication and other tank electronics. Okay. Then you have Hindustan Aeronautics Limited, or HAL, the very famous HAL, right? They also manufacture a lot of different things. They're also a listed company. So I'll make sure I post this entire table here. Make sure you pause the video so that you understand this concept, that not every company which is getting all of these deals, which is exporting a lot of stuff, is listed in the market. So when you see that, hey, all this good things are happening for the industry, don't go ahead and blindly invest. Always you should be looking at why it is supposed to be moving. Is it intelligent to be investing in this company for the news that you're consuming? Okay, maybe the news is about the BrahMos missile. There is no use for you going and buying a Cochin shipyard stock just by saying it's a defense stock. right? So you got the idea, and that should be very, very carefully looked at. Just like any other industry, it is very, very complex. There are a lot of public as well as private companies, and each need to be studied, looked into very, very carefully. There will be few hidden gems. That's a good thing here. There will also be very, very interesting IPOs also coming in the sector very, very soon. So make sure you have that in mind too. So now let's get into a quick SWOT analysis of the Indian defense sector. 2 points for strength, weaknesses, opportunities, and threats. Let's go. In strengths, we have India's large domestic market. Because India is such a large consumer ourselves, even if we don't export, if we decide to be self-reliant, a lot of money will start flowing into the sector, and it will be very, very good for the industry. And the second strength, we're seeing that as well, strong government support. So you can see that through the Atmanirbhar mission, as well as a lot of privatization which is happening, the government is actively promoting this sector to make advanced systems that can compete with the world right now. Okay, that is what the government is aiming to do, and that is a very, very good thing for the Indian civilians. Yes, obviously all of us will be protected more. It's also good for the economy. It will help us grow better, and also always keep in mind that exports are a large possibility. Now, let's get into the weaknesses of the sector. One, the limited high-tech defense capabilities that we are having today, it is limiting us from a lot of different things. Okay, most of our components are imported into the country, and that is not a good place to be, especially if we are such a large country with such a large budget. We should be looking at manufacturing a lot on our own. That is not happening as of today at the scale that we want. That means we are very, very dependent on the imports right now. And two, it is going to be the bureaucratic delays. Whatever said and done, whichever government comes, there is obviously going to be a sense of slowness in the government machinery. Okay, because most of the sector is run by government companies itself, the entire sector is a bit slow. Make sure you have that in mind before you decide to invest in it. Opportunities. We are seeing the world shift to a more advanced systems, like artificial intelligence is being incorporated into everything. So this can create a unique opportunity where even if we are slightly backward in our current capabilities, we can leapfrog the entire world if we decide to double down on that. So that is definitely an opportunity for this sector. In fact, for any sector, you should be having this in mind, how AI is going to define the future for that sector. Now, even here, I want to talk about market feeds. One capital, two returns concept, which is with a single capital, you can make double the returns without having to do any manual work. Okay, the world is moving into automation. The world is moving into advanced systems. Make sure you change your trading as well as investing style too. So if you want to learn more about this, I'll have a link in the description with a dedicated webinar that I'll be hosting. Make sure you click on that, fill up the form, and you can attend the webinar to know more about it. Now, another opportunity is a private sector in India that coming up, and international collaborations boosting it. So even if you're looking at this week's news, there are two major news which came out. Reliance Infrastructure, which is Anil Ambani's company, it signed a deal with a French company yesterday for manufacturing of lightweight commercial jets. Now I know it's not a defense contract yet, but all of these collaborations are really good for the sector itself. Make sure you have all of these news in mind. There was also another news which said that Bharat Forge, it's another company which has signed an agreement with a French weapons firm to manufacture UAVs or unarmed aerial vehicles. These are the attack drones that you have seen very popularly in the news lately. So all of this stuff is happening in the industry. What is happening? Private sector is coming up, and a lot of international collaboration, especially with the private sector, is happening. This is going to be a game changer for the Indian defense industry. Make sure you have that in mind. Now, if you're looking into the threats, there is a global competition. Obviously, it's a very, very competitive industry. And then we also have other countries or other companies not willing to collaborate with India because they also want to keep the technology for themselves. This can also happen. So now I think you've already learned a lot about the industry, things that you have never even heard of before, or concepts it started coming into your brain. Okay, now let's quickly look into few stocks. Again, these are not stock recommendations. These are few stocks that I personally found interesting that you should be adding into your watch list if you want to study this sector deeply. Again, not going into in-depth fundamental analysis of each of these stocks because it will become a 2-hour long video. I don't want to do that right now. But if you want to get in-depth research or in-depth analysis of any of these stocks, make sure you comment down below and we'll be making a dedicated video if there are enough comments there. So when we're looking into the defense manufacturing companies, there are two types, which is PSU or government companies as well as private companies. In the government companies, things or companies which I personally found interesting, I'll be sharing here. Hindustan Aeronautics Limited, HAL, Bharat Electronics Limited, BEL, and Mazagon Shipbuilders. Again, if you're a Cochin Shipyard fan, you can also add that into the list. But I've marked it as orange, not very interesting personally for me. There is also another company which is called as Bharat Dynamics Limited. Those are also not interesting. So the interesting companies are the first three. The next two, not so much. So HAL, as the name says, it's an aeronautics company. It's doing decently well. It's a very, very huge company already with a market cap of more than 3 lakh crore as of today. The stock P is at 40.6. There are good things if you're coming into screener about this stock, which is company is almost debt free. It has delivered a good profit growth of 24% CAGR over the last 5 years. You can see that even in the share price. But there are some bad things also about the company. Promoter holding, which is a government's holding in the company, it's slightly reducing. I don't see that as much of a problem in the long term. But in the short term, whenever the stock rises, there is always a risk for government to come and sell its shares because the government needs money. That is always going to be a risk with PSU stocks. So what I liked about this stock is increasing net profit, increasing cash reserves, as well as low debt. You can find all of this from the screener website. Again, this is not a paid promotion. If I'm promoting any website, any tool, I'll make sure I'll disclose it to you. That's my promise. Now, BEL, as we discussed earlier, it's an electronics company. It makes radars, electronic warfare systems, defense communication, etc. And now you can see that the market cap of the company is nearly 3 lakh crore rupees. Again, the stock P is slightly high because the entire sector, the entire industry has rallied a lot right now. But again, the good thing about this company also is that it is debt free. If you're interested in dividends, these stocks also pay out good, healthy dividends as well. Now, if you're coming into few private sector firms that I'm personally interested in, one is Larsen and Toubro Limited. Again, it's a huge company. Defense is not its only vertical, not the biggest vertical as of today, but it is to be looked at if you believe in the company's other businesses and you think the defense vertical is also going to grow, only then look into Larsen and Toubro Limited from the private sector. Another company that I found and saw interesting is Data Patterns India Limited. It's a slightly smaller company with a market cap of 17,000 crores. The PE is very, very high. It is 76, so you should be showing a bit of caution there. But the growth in the company is exceptional. 60% CAGR in profit growth over the last 5 years. And you can see that the revenue numbers are increasing, the profit numbers are increasing. Things are looking good for the company. But is it the right time to invest? We'll get to that in the conclusion. Now, one more interesting private sector company, it is called as Zen Technologies. They manufacture advanced training simulator and combat training solutions for defense and security forces worldwide. So you know all the simulators where people learn how to handle different scenarios, right? Zen Technologies makes it for the world. They also have anti-drone solutions as well. Again, the company is slightly a smaller company, 17,000 crores market cap, having a PE ratio of 63. But even here, you can see the common pattern. Any stocks that I'm discussing, their profit as well as revenue growth is exceptional over the last many years. Because of this, there is a chance for them to be slightly overpriced. But one thing, these are stocks that came into my radar. These are stocks with my limited time and effort. I found these 6 stocks interesting. Which are they? HAL, BEL, Mazagon, as well as L&T, Data Patterns, and Zen Technologies. There are a lot more companies that I think you should be looking into. MTAR Technologies Private Limited. There is Paras Defense and Space Technologies Private Limited. There is also the solar industries that we discussed earlier. There is a Bharat Forge that we discussed earlier. Premier Explosives, as well as PTC Industries. All these stocks are interesting. They're ready to be studied. I'm giving you all the stock names so that you can go ahead and do the analysis yourself. You can see if these companies are good. And if you want to learn more about fundamentally analyzing a company properly, I'll make sure I link all the videos here in the I button, how you can use the annual reports of companies to start analyzing them better. So I hope you got the vibe or the basic understanding of this sector and the stocks inside it. When we are looking into the growth potential and the conclusion part of the video, Now, this is where things get interesting. If you're looking at data, again, data says that after every major war or every major terrorist incident in India, for the upcoming 3 years, India's percentage of money going into defense in the budget will be increasing. That means whatever we saw in 2025 is not going to be a big number, because 2026, 2027, we are going to be seeing higher numbers being allocated by the government into the defense sector. You can see this pattern being repeated in the 1962 Indo-China war. You can see it being repeated in 1971 in the India-Pakistan war. You can even see it in Kargil in the 1990s, and you can also see it after the 2008 attacks in Mumbai. So this is a common pattern. Make sure you have this in mind. There is a lot of potential in the stocks and the industry. Now I want to have some serious one-on-one talk here. What is it? The major thing that you should understand when you're investing into this sector is that there is no patriotism here. You should be looking at only from an investor's point of view, because in the secondary market, in the share market, whenever you're going to purchase a share, it does not go to the company, it does not go to the government. You're just giving an exit for whoever was a previous investor. So you blindly investing into defense companies is not a good patriotic move. Do not let your emotions, your thoughts control your investment decisions. It is very, very crucial. Always try to think with a logical mind. Okay, and if that is the case, let's get into the major part of the video that I want to discuss here, which is most of the stocks look a bit overstretched to me right now, but all of them look as good long-term potentials. So when I said I'll be investing into the Indian defense sector in the podcast, I meant it, and I'll be investing into dips in the sector. Okay, I'll be waiting for dips in the sector. I'll be looking at good opportunities, waiting for all these companies to come up at the right levels, or at least consolidate for a while and give me confirmation that their earnings, their revenues are all building up to it. Then I'll decide to invest, double down in the sector. Okay, so you see the pattern. Stocks are interesting, sector is personally interesting for me. Again, not investment advice, but I would not personally go ahead with investing blindly at the levels at which it is at right now, unless I have some crazy hidden gems of stocks, which I understand by fundamental analysis. And when I say there are going to be hidden gems, there are obviously going to be a lot of great opportunities in the Indian private sector, especially as the government starts promoting them. So make sure you have your eye out for a lot of great opportunities. I hope you got a lot of value from this video. I wanted to share what my thoughts are about this sector and wanted to discuss a few stocks with you as well, which I personally find interesting. Now, I hope I've done justice to the title and thumbnail of this video. So if you like the video, make sure you hit the like button. If you want to see more content like this, hit the subscribe button as well. And let's wrap up the video. This is Ajay Ajith signing off. See you all again. Bye bye and Jai Hind.